Ever wonder where venture capitalists get all that money they throw around?
Yeah.
Like, on all these startups?
Right.
You'd think they're just
Yeah.
plucking like $1 million bills straight from a money tree.
Yeah.
Right.
Right.
Well, today's deep dive, we are going to burst that bubble
Yeah.
and reveal the real source of power in the VC world.
Absolutely.
The often unsung heroes known as
Yeah.
limited partners
Yeah.
or LPs.
It's easy to get caught up in the VC hype.
Yeah.
But the truth is, those firms are playing with someone else's money.
Right.
Think of LPs as the power behind the throne. They're the institutions and individuals who actually provide the capital that fuels those venture investments.
Our guide through this fascinating world is Meghan Reynolds, who's a veteran of the capital formation and investor relations scene. She's been in the trenches at Goldman Sachs,
Right.
TPG,
Yeah.
and now Altimeter.
Yeah.
So she's seen firsthand how this whole VC funding machine really works.
And trust me, she spills the tea in this interview.
Oh, I bet she does.
Yeah.
Okay, so let's unpack this whole LP world.
Okay.
Who are these people? Are we talking about like shadowy figures in smoke-filled rooms?
Well, not quite.
What?
You might be surprised to learn that LPs are a pretty diverse group.
Okay.
We're talking about university endowments, pension funds,
Okay.
those high net worth individuals you read about.
Right.
Even your own financial advisor could be an LP.
Wait, really?
Yeah.
My financial advisor's an LP.
Could be, yeah.
Wow.
Yeah.
I hate to have a chat with them.
You should ask them about it next time you talk to them.
I will.
Yeah.
But here's something I find fascinating. Meghan points out that a lot of those ultra-wealthy individuals,
Yeah.
the ones with like more money than they know what to do with,
Right.
they actually have less exposure to private companies than those big institutions.
Interesting.
It is interesting. Why is that?
It seems counterintuitive,
Yeah.
but it all boils down to experience and risk tolerance.
Oh.
Endowments and pension funds. They've been in the venture game for decades.
Right.
They've ridden out market crashes, tech bubbles, you name it.
Yeah, they've seen it all.
They've seen it all.
Yeah.
And they've learned how to stomach the risks and reap the rewards over the long haul.
Right.
That long-term perspective makes them much more comfortable allocating big chunks of their portfolio to these alternative investments.
So it's like they have a different relationship with risk than, say, someone who made their fortune overnight on a tech IPO.
Exactly.
Yeah.
They understand that venture capital is a long game, and they're not afraid to play it.
Yeah, makes sense.
Yeah.
So if everyone wants a piece of the VC pie, how do these firms actually manage all this money
Yeah.
and keep their LP investors happy?
Right.
It sounds like a logistical nightmare.
That's where capital formation comes in.
Okay.
And Meghan is very clear. It's not just about dialing for dollars and raking in those big checks.
Yeah, there's got to be more to it than that.
Absolutely.
Right.
She emphasizes that the name of the game is building real, lasting relationships with LPs. Think trust transparency, a deep understanding of their needs and goals. It's not a one-night stand. It's a long-term partnership.
It's like dating, but with millions of dollars on the line.
Well, there's a reason why people in the industry call it relationship capital.
Right.
It's as valuable as cash, especially in a volatile market.
Speaking of relationships, Meghan shares this great anecdote about how consistently nurturing a smaller $5 million LP,
Yeah.
just staying in touch, keeping them informed,
Yeah.
led to a $1 billion check later on.
Wow.
Talk about the power of staying top of mind.
Yeah.
Right.
That's incredible.
It's huge.
Yeah. It really goes to show you never know when that investment's going to pay off.
Right.
Sometimes a little bit can go a really long way.
Absolutely. And it makes you wonder if some VC firms are kind of missing the forest for the trees, right?
Yeah.
Like chasing those headline-grabbing deals while kind of neglecting those relationships with the smaller players.
It's an interesting point, and I think you're hitting on something really crucial here.
Okay.
In the past, it might have been enough for VCs to just show up with a hot track record and a firm handshake.
Right.
But those days are gone.
Yeah.
LPs today are much more sophisticated. They're demanding more from their VC partners.
So it's not just about those fat returns anymore.
Oh.
I mean, I'm sure returns are still important.
Of course.
Yeah.
Returns are the price of entry in this game, but they're just the beginning.
Okay.
Imagine you're an LP with billions of dollars riding on these investments. Wouldn't you want a VC who keeps you in the loop?
Yeah.
Especially when things aren't going according to plan.
I know. I hate it when people leave me in the dark. Give me transparency or give me death.
Exactly.
Yeah.
And that's what Meghan highlights as a major pain point for LPs.
Okay.
They crave transparency and communication probably even more than they crave those big exits.
So what does that look like in practice?
Right.
Are we talking about like daily phone calls and personalized newsletters?
I mean, not necessarily.
That's right.
It's more about providing clear, consistent updates on the portfolio,
Okay.
being upfront about risks and challenges, and generally being a reliable and communicative partner.
Right.
Meghan points out that many VCs just assume their LPs have this crystal clear view of their portfolios,
Yeah.
but that's often far from the truth.
Yeah. I can see how that would be a problem, like keeping track of investments across hundreds of companies and funds.
Yeah.
That sounds like a full-time job in itself.
Exactly.
Yeah.
LPs are incredibly busy people managing vast sums of money.
Right.
They need their VC partners to make their lives easier, not harder.
Totally. Yeah.
No.
It's like that saying, under promise and over deliver.
Yes.
Give those LPs more than they expect, especially when it comes to communication and transparency.
Absolutely spot on.
Yeah.
And that's never been more important than it is now.
Okay.
The fundraising environment for VCs is notoriously tough, especially in today's market.
Yeah. I've heard whispers of a VC funding crunch.
Yeah.
Is it really as bad as they say?
It's definitely a challenging environment.
Okay.
The competition for LP capital is fierce, and there's a lot of uncertainty in the air. Meghan draws a fascinating parallel to the private equity market back in 2010. She says many VC firms are still playing catch-up in terms of professionalizing their capital formation strategies.
So it's like they're stuck in the Stone Age while the rest of the industry has gone digital.
Well, maybe not that extreme.
Okay.
But there's definitely a sense that some firms need to up their game when it comes to courting and managing their LP relationships.
So what's the secret sauce? What separates the VC firms that are killing it in this environment from those that are struggling to stay afloat?
Yeah, it's a great question.
Right.
Meghan boils it down to a few key principles:
Okay.
honesty, transparency, and a genuine commitment to building authentic relationships with LPs. She says too many VCs still treat fundraising like a transactional necessity
Right.
rather than an opportunity to cultivate long-term partnerships.
So it's not just about pitching the next unicorn. It's about building trust and showing LPs that you're in it for the long haul.
Exactly.
Yeah.
And that means being upfront about the risks, being responsive to LP concerns, and understanding that their needs go beyond just maximizing returns.
It's about being a true partner, not just a money manager.
Precisely.
Okay.
Yeah.
So what are some of those do's and don'ts for VCs navigating this tricky fundraising landscape?
Yeah.
Give us the inside scoop.
Meghan lays out some great advice.
Okay.
First, she says VCs should always be in fundraising mode.
Okay.
Don't wait until you're running on fumes to start cultivating those LP relationships.
So like always be closing, but for LP money.
Exactly.
Right. Okay.
Second, be upfront about those portfolio risks. Don't try to hide the bad news or sugarcoat things. LPs appreciate honesty even when it hurts.
Yeah.
And finally, never, ever tell an LP how to allocate their capital.
Oh, wow. That's like going to a doctor and telling them how to do surgery.
Exactly. LPs have their own investment strategies and risk appetites. Respect their expertise and trust them to make the right decisions for their portfolios.
It all comes back to respect, communication, and building those genuine relationships.
Absolutely.
Now let's talk about a trend that's been catching my eye lately.
Yeah.
This shift in LP interest toward seed and early-stage venture capital funds.
Interesting.
It seems like there's less enthusiasm for those later-stage growth-focused funds.
Yeah.
What's driving that change?
You're spot on. There's definitely been a shift.
Yeah.
A big part of it is the recent performance of early-stage investments. They've been outperforming the later stages, and LPs have taken notice.
Makes sense.
But there's also a healthy dose of caution creeping in, especially after that 2021 boom when valuations for late-stage startups went through the roof.
Yeah, it's like everyone suddenly realized that not every tech company is the next Google.
Exactly.
Right.
And when the public markets get jittery, as they have been lately, that fear trickles down to the late-stage private markets. Suddenly, those billion-dollar valuations don't look so stable anymore.
So it's like those LPs are thinking, why swing for the fences with late stage when we can hit singles and doubles consistently in the early stages.
Yeah, that's a great way to put it.
Right.
But let's be clear, there are pros and cons to both early and late stage investing. Early stage has the potential for those massive home run returns,
Right.
but it also comes with a higher risk of strikeouts.
Totally.
Late stage, while potentially less volatile, is often more closely tied to the whims of the public markets.
And with late-stage companies, there's just less runway for them to really grow and mature before they need to deliver an exit.
That's an important point.
Right.
Now, remember that anecdote Meghan shared about the conference where LPs were being offered single-deal SPVs,
Yeah.
special purpose vehicles?
Yeah, basically a way to invest directly in a specific company rather than through a traditional VC fund.
Exactly.
Right.
This trend towards SPVs, especially at lower investment thresholds, is shaking things up.
Okay.
It gives LPs more direct access to exciting deals, potentially cutting out the VC middleman.
Interesting. So are we going to see more of that? Is that like a sustainable model in the long run?
Yeah, it's a question worth pondering.
Yeah.
On the one hand, SPCs offer LPs more control and potentially higher returns.
Right.
But on the other hand, if LPs start cherry-picking individual companies,
Right.
it could become even harder for VCs to raise those large diversified funds.
Right.
And those large funds are often better positioned to support companies through multiple stages of growth.
It's almost like we're seeing the democratization of venture capital in action.
Yeah.
Like LPs are no longer content to just be passive investors.
Right.
They want a seat at the table. They want more control, and they're willing to explore new models to get it.
It's a fascinating power shift.
Yeah.
And it all circles back to those changing dynamics between VCs and LPs that we've been unpacking. As the industry matures, who will hold the reins?
Right.
Will those lines continue to blur?
It's a question worth pondering as we wrap up our deep dive into the world of LPs.
Absolutely.
So listeners, here's a final thought for you to chew on.
Okay.
Given this evolving landscape, what does the future hold for the relationship between VCs and their investors?
Yeah.
Will we see more collaboration, more competition, or maybe even a complete reinvention of how venture capital works?
One thing's for sure, it's going to be fascinating to watch it all unfold.
Absolutely. And on that note, we'll leave you to ponder those questions. Until next time, keep exploring, keep learning, and keep diving deep.